Hello everyone, welcome to this next edition of Market Ruburu. Today I have with me a trader from Pune who has an experience of more than 22 years, which includes experience in the international market, mostly with institutions, international institutions. So some of the names which we hear of as FII, so he has worked with them at the back end, also includes developing algos for them. So welcome Abhijit Bhate.
Thank you.
So he is also a trader who has been using OPSTRA extensively over the last almost 5 years now. And if old timers remember, we had done a similar topic with him in October 2020 on iron condors, which he is doing quite regularly since last 5 years. Only difference, and why I am highlighting this now is now the conditions are different. That time VIX was, I think, maybe 25 or 30, and now it is only 11 or 12. And how the conditions change and how the returns change, the probable profit changes. That is a very big example when you should do it and when you should not do it, and what to expect. So those days, the profit, which the expected profit used to be 4 to 5% in a trade over the next 3-4 days, and now it is not even 3%. It is much less than 3%. So let us welcome him and let him explain the rules as well as what has changed from that time to this time in the last 2.5 years.
Okay. Yeah. Thanks, AP. So what we will try to do is we will not go into the basics of iron condor as of now, because a lot of viewers would be familiar with it. So what we will start with, we'll start with the rules of my system straight away. So I do this with Nifty very regularly. That doesn't mean you cannot do it with Bank Nifty, but I just prefer Nifty because it's less volatile compared to Bank Nifty. And since iron condor is a non-directional strategy, I want a less volatile instrument to trade that. That is why Nifty. There is no other reason behind that. So essentially, iron condor means that you are looking for a range of the market.
It is basically a non-directional strategy.
It's a non-directional strategy, and it's a range-bound strategy. You're hoping that the range you define for your condor, Nifty will expire within that range for you to get maximum premium from your strategy. So what we will try to do is we will try to cover the entries when I enter. We will try to cover exits. We will try to cover my other rules in terms of how to select the strikes. We will try to talk about what I do when the range bound market is not range bound anymore. And how to exit the iron condor.
Something which has happened over the last couple of weeks.
Absolutely, yes. So that we will talk about that, and then we will talk about any other nuances of the strategy, where how can you carry only a spread instead of all 4 legs of condor and so on.
So essentially, an iron condor is nothing but 2 spreads. One is the call spread, one is the put spread.
Yeah.
Okay.
Yeah. So here, what we are trying to do is, one of the first things is the rules of the strategy. So the first rule, the entry rule. The entry rule is I enter this particular strategy from Thursday afternoon till Friday afternoon, depending on the position of the wicks or the events and so on. Why I have kept this range is that, for example, let's say Friday is a market holiday, then you will have to enter that strategy on the Thursday.
Thursday becomes the Friday.
Correct. So that is why this range. The main reason of this range is you are trying to get into the trade as soon as the position for that particular expiry is getting built. That is why you don't want to wait till Friday end of day to enter those trades.
So preferably you would like to enter on the Thursday afternoon itself.
Yes. But for example, in such a situation where Thursday afternoon you have a rate announcement or a Fed announcement, then I will not be entering on Friday afternoon, but Thursday afternoon, but I will be entering on Friday morning.
Or what if, let's say, the market is trending very strongly on that Thursday?
So that is why the range.
Exactly. So you will avoid that entry on Thursday.
Correct. So
in that case,
the basic rule for this particular thing is you will avoid getting into the trade if you already know that the market is trending.
Yes.
Because by definition, it's a non-trending strategy. So you want the conditions to be as favorable as possible while getting into the trade. How to manage the trade and so on, that we will see. But at least for the entry, you will have to make sure that it's a non-trending market.
Okay.
Yeah. And typically what you will do is that you will hold this particular trade throughout the Friday, Monday and Tuesday. and typically I will exit anytime Wednesday afternoon depending on how the market situation is.
Correct.
So in a way, your hold period for this particular strategy is 3.5 days.
Right.
For the weekly. So entry and exit rules are pretty simple. What is most important part in this particular strategy, based on my experience for last so many years, is when not to trade this strategy.
Yes.
So that is one of the big rules which everyone has to follow, that no trade entry before any major event. That is what I follow. Now what do you mean by major event? It could be a RBI rates meeting, it could be budget, it could be election results.
What about event in US Fed meeting?
So for example, if you remember the last session that we had, October 2020, I had specifically mentioned that I have not entered into the trade because there was a US presidential election result.
Right.
And that is why I had avoided that week for entering into this.
Yes, that was November
strategy.
1st week. Yeah.
Absolutely. So that is the first major rule, when not to trade.
So maybe let's say out of 52, you will have maybe 8 or 10 weeks where you won't trade.
I would think about 5 to 6.
Okay.
About 10% of that amount you would have to let go. Yeah. And that is the important part of having consistency in this strategy, that you will have to make sure that you don't enter in bad weeks.
Right.
So to speak.
Very volatile weeks.
Exactly. The second big rule in the thing is, you are not entering this particular strategy when VIX is high or rising.
Okay.
So when I say high, the natural question would be, how much?
How high is that?
Yeah. So based on my experience, what I have realized, the sweet spot for this particular strategy is VIX between 14 to 21, 22.
Okay.
If the VIX is between this range, you get decent amount of premiums and you get not so volatile market. So that it's a sweet spot for the condors. If it is more than 22, 23, 24, you get lot of volatility in the market which you do not want to trade. And the low volatility also, you won't get premiums.
What about a condition where VIX is high, let's say it has gone up and now it is declining? So what happened from 23rd March 2022?
Absolutely. So I think that is where I have mentioned that
rising.
It should not be rising. Okay. So let's say
what I'm saying is, let's say it has gone to 30 and now it is coming down. So
then I will be able to take the trade because it is not rising. Okay. And that is why the first rule matters, that if it is rising on Thursday afternoon, I will not be taking the trade. But for example, let's say Friday morning session, it cools off and it goes down, then I would be in a much better position.
So basically one eye is on the VIX before taking it.
Yes. And that becomes important, because these two things, if you are able to avoid, then your hit ratio of this strategy increases a lot.
Right.
Because you are not unnecessarily getting into the trade and getting stopped out.
Yes.
And that becomes an important factor while managing the consistency of these returns, because this strategy is something which will be in your armor for generating consistent cash flow, not for generating 5x and 10x.
Yeah, naturally. This is a monthly income strategy.
Correct. Kind of. I mean, weekly income, because it's weekly options. But yes. So, and see, we have covered entry, we have covered exit, we have covered when not to trade.
Yeah.
The main issue is which strikes to select.
Yes.
So what I have experienced, I have tried multiple combinations and of which delta to use and so on. What I have arrived at is about 15 to 20 delta is the sweet spot for me. When I say 15 to 20 delta, I am talking about the main legs of the condor,
right,
which I am selling.
Yes.
Those should be somewhere between 15 to 20. Now 15 to 20 is not a hard rule. It could be 14, it could be 22. That depends on how you are getting, because I typically trade with full strikes. I don't trade with 50 strikes, because I trade
with hundreds.
So I trade with multiple lots. So I have found that the liquidity is much better and the spreads are much less on the hundreds rather than 50s. So that's how you will adjust. But typically it should be in the range 15 to 20 data, which currently translates to about 400 to 500 point wide condor. So When I say 400,
does this also mean that way back, let's say 3-4 years back, this would have been maybe 300 to 400?
300 to 400, correct.
Now it is 400 to 500.
Now it is 400 to 500. Now, one of the main reasons for that is if you see last few weeks, the VIX has really cooled off. That is why you have to
cooled off is an understatement. It is dead.
So that is why you have to go wider to have that safety net. Because here what is important is not to have big loss.
Yes, sudden spike
can kill you in this particular strategy. That is why you want to avoid it as much as possible. Even though the return comes down to, say, instead of 2.5% or 3%, you are getting 2%, that is fine because that is weekly return.
So what this means is, even if, let's say, Nifty moves by only, let's say, 100, 200 points down, still the VIX might spike up, and you might still make a loss.
Absolutely.
Even though it is within your
range. And that is why you want to avoid, that is why you are having a wider.
Correct.
And that is why the range of the delta, 15 to 20, not a fixed amount of delta, but the range of the delta, that depends on the VIX as well as the market situations.
Yeah. So the exit is not based on delta.
The exit is not based on delta, but we will talk about it later on.
So something like, let's say, we'll talk about the actual examples, but let's say this 20 becomes 40 or 50, something like that. Is not
that is not my criteria. So there is no drifting of delta or anything that I try to do here. Typically, what I do here is exit on a Wednesday, depending on how the market is, somewhere in the afternoon session. So it could be 12:30, it could be 1:30, it could be 2:30, that depends. So
that is a bit discretionary.
You have that flexibility in this particular strategy because by that time you already have, if the strategy is working for you, the premium erosion has already happened.
Yes.
So the 12:30.
So basically something like 2 rupees and 2.5 rupees doesn't
or 3 rupees. So that's the only difference that you will have.
Yeah.
So these are pretty much the rules that I work with, the framework, as so as to say. Anything that you think you want more explanation here?
I'm sure people will again ask, though you have mentioned it, what about Bank Nifty? Stay with Nifty, that is safer. Bank Nifty is a juggly billy. Why do you want to play with something which is too much volatile? So stay with Nifty.
See, one of the main reasons I have not gone with Bank Nifty while designing this strategy is that Bank Nifty is a very narrow index. It's Bank Nifty.
Only 12.
12 stocks, and that too from one sector.
Yes.
So it tends to be volatile. So that is better for option buying, where you're trying to riding the train.
This is a very big...
And Nifty, I have found, is better for option writing, where it's a very diversified index and you have much more chance of doing the non-directional strategies there. So that is the discretion that I make. So I do run a option buying strategy on Bank Nifty, but that is only buying. That is nothing to do with non-directional.
That is based on Renko chart.
That is based on Renko charts.
So maybe we can have another Ruburu sometime later. Okay, so this is an example of a trade which is a potential trade for next week. By the way, we are recording this on 12th April, which is a Wednesday. So this trade will be taken tomorrow,
which is Thursday,
because Friday is a holiday.
Yes.
So these conditions might change. In any case, by the time you see this, it will be already Saturday.
Correct.
So the numbers might change. So that is just a.
So the disclaimer is, right now the Nifty spot, as you can see on the screen, is 17,812. That is as of Wednesday close.
Right.
So if at all we have a very good move on Thursday morning or in the first session tomorrow, then the strikes will change because the deltas would change and the condor may be wide or not.
Just as an example, if let's say instead of 17,812, Nifty goes to 17,950, then this 18,100, 200 will be maybe 100 rupees higher.
So take a hypothetical case. Tomorrow market opens positive, let's say, and instead of 17,812, Nifty opens with 17,900 and it goes to 18,000 in the next 1 hour or so. So 18,000 would be your
base
focal. So from 18,000, what you will try to do is you will try to do either 18,200 or 300 delta call, or 17,800, 17,900 put. So it will depending on the deltas. But these values which I have derived as of now it looks very balanced, because the puts and the call spread is evenly spaced out, as well as the
Delta is
deltas are
same.
also similar.
Similarly, if Nifty goes down by 100 points, this will shift lower.
Absolutely.
This band will shift
Correct.
lower.
Correct. And one more note is you mentioned about the option low premiums last week.
Yeah, if whoever has seen that old video, in fact, if you have not seen it, I request you to see that. Those days, whenever we used to plot the payoff graph, it used to be something like 4 to 5% maximum possible profit.
Yes.
Whereas nowadays it is only 2.5, not even 3%, 2 to 2.5%.
Yes.
So that is a classic case of what happens when IVs are low, VIX is low.
Yeah.
So that's why the low premium for next week, and that gets translated to the premium.
True. But I think what you should be concerning about is the overall returns that you make over a period
Yes.
of a few weeks rather than only 1 week. Because
At the same time, I must stress that just because the premium is low, that doesn't mean you should come inside.
Correct.
Because then you are exposing yourself to a bigger risk.
Totally.
It's a very natural thing for anyone to say that, okay, instead of 18,100, 200, I'll move to 18,000 and 18,100. So probability of profit increases percentage.
So
but that is not the case.
Yeah, the bottom line is don't be greedy.
Yeah.
By looking at the probability of profit and the return, I mean that is a given that if you try to squeeze your condor, a narrow one, your return percentage would increase, but your probability of profit would also go down considerably, because it will not be a condor in a way, because you're
and especially with low VIX, who knows, there might be a explosion of VIX in the next few days. Correct. And then your range goes for a toss.
And what happens, especially in low VIX environment, is your premiums are already low.
Yes.
So your risk reward is already not in your favor. Correct. So that is why you have to be extra cautious in not risking too much capital by narrowing the condor.
Yeah. So maybe one very conservative way is just don't trade this when VIX is below 14.
That is one way of doing it.
You are getting 1.5%, 2%. But of course, for those for whom 1.5%, 2% also is not bad, they can trade it.
You can trade.
But then don't. To be honest, this is the wrong time for anyone to start with
iron condors. True, because it's a low VIX environment. Yeah. Now, before the session, as we were speaking about, if you look at the previous week and you look at the week previous to that,
6, 10, 13 April, yeah.
Both weeks the iron condor has not worked because the market has trended in one direction.
It is trending continuously.
And your call legs have been stopped out.
Yeah.
So essentially, what we should do is that whenever you're that part we didn't discuss. In fact,
exit.
So exits. So what happens is, in a normal exit is that you are holding both the legs till Wednesday and you're exiting all 4 legs on Wednesday.
Yeah,
and you're making a profit.
When you show this payoff, it will be easier to understand.
Yeah. So this is nothing but what we have plotted in the previous slide. I have plotted on OPSTRA. Now again, a disclaimer is that this depends. These are as of Wednesday close values.
Yeah, this will change.
They may change Thursday depending on how the market moves. But currently, what we have tried to do is we have tried to select the trades between 15 to 20 delta, and we have tried to do a condor here. Yeah. Now, what we will try to do here is that we will try to discuss all 3 scenarios.
Right.
So the first scenario is your judgment is perfect. The Nifty is going to expire within that range, and you're going to get.
So the range is basically 17,600 to 18,100.
Correct. So as you can see there.
Yeah.
So if the Nifty is within this range on Wednesday without any problems, then I'm going to.
But exit. Again, that is easier said than done, because let's say market becomes volatile, it goes to 18,200 on Monday.
Correct.
And then comes, so you have to take action.
Correct. So that is where the not so ideal situation comes in.
Yeah.
What we discussed about is the ideal situation.
It stays within the range till Wednesday.
Now let's consider that on Monday there is a huge gap up, and as you can see, the 18,123 is your break even, and Nifty goes to 18,200. What I'm going to do is, as soon as my break even range is broken,
one extreme is broken. Yeah.
One extreme is broken. I'm going to let go of that leg.
The call leg.
So in condor, I'm short put, I'm short call. The moment the call is not working for me, I'm going to exit the call.
So in a way,
at a loss.
Book loss.
At a loss. Now, That is probably the most critical part of doing this strategy. That when it is not working, it becomes extremely crucial for
Don't
you to
start
be
fighting with it.
correct. Extremely crucial for you to exit as soon as possible, because even a 15 or a 20-minute move in opposite direction can kill your
In fact, by that time, this delta, which is 15 to 20, will be about 50
possible
that time, because that will be at the money.
that will be 80th. So that is the second situation.
Yeah.
Now the second situation, there are two parts. So for example, Monday, in the hypothetical situation, we have exited the call spread.
Yes.
Because it hit. Then what I typically do is, on the put spread, you have already making decent amount of money because the market has moved in your direction, so to speak. There,
as far as the put leg is
as
concerned.
far as the put leg is concerned, there I would book the profit in the put leg and I would pyramid up the strikes.
Because in any case, by that time, when let's say when Nifty goes to, if and when Nifty goes to 18,100, the put premium will be something like 2-3 rupees.
Correct.
It doesn't make sense in holding them
to keep on holding it.
Yeah.
So right now, as you can see, you have a 17,600, 17,500 spread. I might be doing 17,800 and 17,700.
So effectively, what you're doing is basically you're exiting everything over here. The one which you are shown over here. Yeah, okay.
So the logic behind that is that, as I have stressed enough, that this is a non-directional strategy. The moment you realize it is not working, that means it is a trending market.
Absolutely.
The moment it is a trending market, I do not want to fight with the trend.
Okay.
That is why I am not writing a higher call again. And I am just riding on the put.
Okay, so you can shift the put spreads higher and exit the current one. Okay.
And if you have a seriously bad week, what happens is
Nifty
crashes and your put leg would also be in a loss. So
the new
put leg. So in that particular case, that would be the worst week of the strategy, where you have both legs being hit by your exit.
In any case, the loss will still be less because you have already booked one put leg, which is maybe equal to the loss booked in the call leg. So net, it will still be in loss.
Net, it will still be in loss, but it will not be. It typically never goes above 40% of what you see as the return.
Okay.
So here you see return as 1,200, something like
that.
Yeah. So
in fact, this is what I said. Right now, this is showing 2.72% maximum profit on the capital. This can be as high as 4 to 5% when VIX is high.
In a decent VIX environment. Also, you have to account to the fact that this is Wednesday, end of day. So by tomorrow, if I plot the same thing, the premium will have decayed even further, and you may end up seeing 2.5% here as well.
Correct.
And that is the bad part of being in a low VIX environment.
Okay.
But so again, coming back to why I exit, is that this particular strategy, whenever a leg on the put or the call gets hit, that is a clear indication for me that this week is not for non-directional strategy.
Absolutely.
So I do not want to fight with the trend. So I just accept the call exit and I try to make money on the put. Yeah. If the case happens reverse on Wednesday or on Tuesday, then I would be exiting the put leg and I would be pyramiding up the call leg.
Yeah, but not if you have already exited the call leg.
No.
So then you will have no position.
This adjustment is only once. See, why only once is I do not want to trade in and out for those 3 to 4 days.
This is not a compulsive trade.
This is not a compulsive trade at all. This is a strategy that will live along with your other strategies that you are working in your account for decent cash flow generation.
So basically, if let's like you said, Monday you have to exit the call leg and Tuesday you have to exit the put leg. Dukan
ban. Wednesday you are not doing anything. Thursday you have a new week.
That is something which is difficult to do.
Right. See, and you mentioned a very interesting point on the low IV or the low VIX environment. What I have also realized over a period of last 5 years or so, where I've been working a similar kind of strategy, is that the returns don't change much on a longer time frame.
Okay.
Per week returns change.
Cumulative.
But the cumulative returns don't change, because the cumulative returns matter on when not to enter this strategy.
Yes. So there will be, like you said, 5-6 weeks in a year where you will not trade at all.
Right.
So that takes care of, maybe you would have made a loss in those weeks.
By sure, I would have made a loss because it's a high VIX environment or an event-driven environment, which I do not want to be part of. We talked about the second worst situation where my call leg is also getting hit, my put leg is also getting hit. That also happens typically 10 to 15% of the times.
Yes.
So again, probably
But again, that will not happen in low VIX environment. At that level, in high VIX.
it may happen. So for example, previous week, it was a low VIX environment, but still my call leg got hit.
No, only one leg getting hit is fine. I'm talking about this leg as well as this leg getting hit.
No, that won't happen in the low VIX environment a lot. So typically, if you say, want to put some statistics or put some numbers on it, out of 52 weeks, you are good for about 30 to 35 weeks for getting good returns on this strategy.
So about 3 to 4%.
3 to 4% in a nice.
Again, yeah.
But here you are looking at 2.5%.
Yeah.
And that is your call. Whether you want to go ahead and risk your capital for that much amount
and
of
this is in the 3-4 days of traded. So per week you can say.
Per week, yes. Okay. So, but those are not absolute because you have to account for the weeks where you are making the losses.
Correct.
You have to account for the weeks where you are breaking even, and you have to account for the weeks where you are not trading. So
maybe net everything put together, you can target 1 to 1.5% net.
About 2% is also not a bad assumption to start with.
And again, this is on the traded capital. This is not on the traded capital. No,
this is not on the allocated capital.
People should not make a wrong judgment.
So here, as you can see in OPSTRA, one lot, you're only looking at about 45 to 50K as margin.
But typically you will have about 1 lakh.
I typically trade with 1 lakh per lot.
Yeah, at least. Yeah.
On this.
So the returns will be on 1 lakh.
Yes.
Not on 40,000.
Yeah.
So there is a difference between traded capital and allocated capital, which a lot of people don't consider. Yeah. Okay, so I think that
any other questions that you
I think I have asked most of the questions. So let's see what viewers think of, and you can ask these questions on the video in the comment section, or you can ask him on Twitter. He has not been too active on Twitter, but he has promised me that he will be active now. So hope you enjoyed it. Do subscribe to our channel, like it, and share this video to everyone who who trades options. Thank you.
Thank you.